Very good morning. You're watching India Market Open, and it's looking like global cues are going to be positive. Niraj, good morning. Maybe some of that stress we saw in closing yesterday could be dissipated with what we're seeing at least in Asia this morning.
Yeah, I mean, and this is despite maybe on expected lines, the FOMC minutes sounding off what most people anticipated. But interesting, Tamanna, that you say that because while we talk about earnings, and I'm sure you have a lot of thoughts on NVIDIA because spectacular numbers, but FOMC, NVIDIA, Asia, and then the kind of fall that we had yesterday to be recouped. So lots to talk about this morning.
Lots to talk about this morning. And just add to that mix, HSBC. 80% plus revenues wiped off because of China overhang. So a lot to unpack on the global side. Domestically, of course, a ton of stock-specific news that is going to, really drive the markets and news. An important cabinet decision, set of cabinet decisions yesterday in the defense space on sugar stocks. So we'll unpack all of that. But let's quickly take you through the top global cues. So Wall Street regular trade ended fairly muted, but the action after markets closed on Wall Street, futures were up, driven by NVIDIA. And what a story NVIDIA really is. Their quarterly numbers are just mind-boggling. Look at that figure. Year-on-year revenue is up 265%. The company that bet on AI is ruling the roost. A bit of short selling before the numbers came in, but the traders who decided to short sell must be crying right now because that stock has jumped at least 8% post-trade, perhaps pared down by now. So NVIDIA, the story on Wall Street. But the other big story, and really the really big one, is the FOMC minutes. Now, the reason this was important is because the Fed made it clear that they're not ready to cut rates anytime soon. Powell, in an interview, had made it clear. The minutes have underlined this once again. So I wouldn't say any massive negative surprise in what the FOMC minutes reveal, but most officials have noted the risks of cutting rates too quickly and also asking the question that once we move down the rate cut cycle, can we really sustain it? Data is giving mixed cues. You've had some inflation data which is running hot. That's not really giving comfort to officials. And the one good thing that is underlying is that rates are at their peak. This has been reiterated time and again. However, look at what happened to the 10-year. It has trended over the 4.3% mark, not massively though. Not massively though, because that much fear is not really coming in from what FOMC is saying. I'll just quickly mention a couple of other things because a lot of news overnight that we should unpack. And I was talking about HSBC. European markets were slightly down and HSBC was a big culprit. But I'm talking about this stock specifically because it sunk 8%. Their pre-tax profits dipped 80% on an overhang of Chinese banks. And that's really one story to track, that what's happening with China's financial system, with their real estate, is there going to be a spread and a contagion? HSBC, anyway, obviously did feel some of that brunt. But Asia, otherwise, a different story. I'll just pull up the Nikkei. Look at that Nikkei. It is at all times high. It has surpassed levels it hit in 1989. Strong corporate results is largely responsible for that. And if you pull up the entire Asia Pac, it's not looking too bad at all, apart from the Hang Seng slightly down. So the question is, then we come back to it, are we going to see some of that pair out in our markets today, which have been a little skittish, to be honest, Niraj?
And you could argue that. But, Tamanna, I mean, just before I get to trade setup individually per se, because we saw a day of profit booking, it's just interesting to see the kind of subscription that is coming into paper from India. Across. And I know there's so much of conversation around how MNC companies are selling out, etc. Chinmay, our colleague, is going to put out a story today, which speaks about how all through 2023, we've seen PE exits, promoter exits, and the chatter was always that, oh, everybody's selling, expensive retailers are buying, they'll hold the last bag. And the markets have actually rallied quite convincingly since then too. Yeah. So there's this talk about this Eureka Forbes deal today, etc. But look at the QIP of Union Bank of India, 10 times subscription. Insane. And people are talking about PSU banks being expensive. People who are putting in money are not fools for a 10x subscription to the paper available. There's a chatter that BlackRock might have been invested as well. So there's some serious move towards quality Indian paper happening. People should take cognizance of that is one key point. So I thought that was interesting. I mean, just the fact that Union Bank of India QIP has been subscribed the way it has been is quite stunning, really. So that was one. But you were right, so right. I mean, we saw 100, 120, 150 basis point, or rather points fall yesterday on the Nifty. You're talking about on the countdown show yesterday as well. I mean, 6 days of consecutive up move on the Nifty. I mean, you will probably see some bit of a corrective move happening, and that is what probably we saw yesterday. So that was part one, and par for the course, really. Now, because people look at levels so closely, I just thought to highlight that when you look at the call option data on the strikes, 22,200 and 22,300 are the highest OI positions, and therefore, optically, that is the point of key resistance. There is also a point wherein if the market takes that out swiftly, there could be short covering. Very unlikely that will happen today, but those are the levels to keep in mind if you really want to look at levels. So that's part two. And part three, something that again both Tamanna and me highlighted on India market close yesterday. Amidst all the corrective moves that we saw yesterday, two spaces stood out. PSU banks, SBI was in the green, and real estate. Real estate stocks, a lot of them hit fresh life highs in trade yesterday. Look at the Brigade announcement today, and we'll talk about that as well later on. But just goes to show that there is some serious interest and serious business proposition in a set of select real estate names, and therefore that pocket should be keenly watched out for. DLF was at life highs, Phoenix was at highs yesterday. So clutch of those stocks are doing very well, and I think that's a sector that certainly remains firmly in focus. So that's to be kept in mind for sure.
Yeah, I would add macro tech to that mix. Raymond, and even just a quick word on real estate to add on to exactly what you said, which is absolutely right. If you look at the numbers, the quarterly numbers, the high input costs are weighing down to some extent, but the cycle is just at its beginning, which is why a lot of analysts are still bullish on it. You might see, a few days of patchiness there, profit booking, etc. Real estate, definitely an interesting space. Just sugar, the other one that we should talk about this morning. So last evening, a slew of cabinet decisions. And this one's important because the government has hiked the sugarcane FRP by 25 rupees to 340 rupees per quintal. FRP is the fair and remunerative price. It's, I would say, the MSP for sugar, if you want to put it that way, determines the price at which sugar mills have to buy from producers, from farmers. Now, expected before an election, and you can expect more sort of announcements on this end. This always is a bit of a political issue. It's an 8% hike overall. The question is that will it be very, very negative for sugar stocks? On the face of it is, because obviously if your input costs go up, it is negative for sugar producers. But remember that ethanol blending has seen a lot of positive cues and news in terms of policy. There is a big push there. So we'll wait and see how it actually pans out. But sugar already beaten down is one space that I would keep an eye on. The other big one is Grasim. Grasim Industries has been on a tear. I think up about 7% in the last couple of weeks. 1 month is about 5.5%. And the news flow is about its entry into the paints business. Today, in fact, you will see that official announcement. There's going to be a press conference later in the day that Kumar Mangalam Birla will address. Then they're going to launch the Birla Opus Paints business. They're going to inaugurate 3 plants. So that will be interesting to watch out for. Remember, they announced that foray in 2021, and it's a planned investment of about 10,000 crore rupees. They intend to be the second largest player over the next few years. And I found this interesting, Niraj, because you cover it as well in your 3 stocks to watch, the Jefferies note, which talks about what it means for Asian Paints. And this was a bit of a debate in the canteen this morning while we were getting coffee. That does an Asian Paint really have a threat from Grasim? And just remember how many more players have come into the market. And Jefferies says that maybe it's going to be a bit of competition.
Yeah, I mean, just interesting. I mean, it will be, I'm sure viewers, none of us, neither me or Tamanna, are saying that this dislodges Asian Paints in any fashion, but just the multiples that Grasim Asian Paints trades at, and the point, Tamanna, that Jefferies mentions in their note, that 2 more plants by March 24, 3 more plants over the next 12 months, and according to them, the paint sector has not seen such stiff capacity addition in its history, even by incumbents. So could margins and market share come under threat, and will the markets take cognizance of that? And Jeffries believes the answer is an unequivocal yes. We know some buy-side people who don't believe so. So it's a classic mix, who knows who wins, but if the sector is down today, you know why.
Yeah.
Just the other point, Tamanna, I just did this bareback number crunching for the last 6 months and the last 1 month for the incumbents, Asian Paints, Berger, Kansai, and Nerolac. The last 6 months, the stocks have done nothing. Asian is down 6%, so, well, they're down. Asian is down 6%, Berger is down 2.4%, Kansai is down 5.4%. So these stocks haven't gone anywhere while the broader markets or the Nifty has moved a little bit. So clearly some bit of this is being baked in already.
Maybe a bit of consumer overhang as well. That entire, consumption space has been iffy. So you could see that in the broader picture, or is it a paints problem? Is something we should unpack?
Yeah, but very likely a paints problem because, Amit Singhal, for example, goes on record so many times saying that in an overall house, paints is just 1.5% of the cost.
Yeah.
So we don't impact the cost metrics of a consumer so much. And therefore, very likely that the market has been waiting for this to happen. And now that the details are unfolding, Sajid, our colleague, is at the Panipat unit of Grasim. So it'll be lovely to hear from him and from the management as well. But this could be very interesting as to what happens to stocks because of a big, deep-pocketed player coming.
And think of it logically. We were just talking about how the real estate cycle is booming. You're building homes, offices, you need to paint those walls. So one flows into the other. Just one more on my list that I want to talk about is NBCC. The company has received an in-principle approval from the Greater Noida Authority for the development of unused and purchasable FAR, that's floor area ratio, for the Amrapali project. And, NBCC again has been on a complete tear down, of course, yesterday in trade, but that's one I would watch out for. Brigade is something also that you were covering. So a lot in the building, housing, real estate theme today.
Yeah, and yeah, just a brief update there. I mean, they've signed a JDA for the 2.5 million square feet project in Chennai. One more, right? I mean, these companies from a Brigade to a Sobha to whatever, DLF to Macrotech to whatever, keep on getting these projects one after the other. Oberoi has signed 2 Marriott properties in Mumbai.
Yeah.
There is talk that Prestige might sign a few more very soon. And Brigade is also going to open a hotel as well. But the revenue potential of this JDA alone is about 2,000 crores, Tamanna. We don't know the breakup, of course, but very likely positive for Brigade. So could see a reaction today.
So just from stock focus to a little bit of macro, what's exciting when people start constructing more and India starts constructing more? A huge multiplier for the economy, for jobs, for all the industries that get impacted. So overall, if you were trying to look for an example of an economic boom, this is definitely a very clear-cut one.
Most certainly. Yeah. Okay, so these are a few stocks. The 3 other stocks on my radar, Eureka Forbes. We put out that piece yesterday on our on the channel and on the social media that promoter Lux would sell up to 12% stake in the company via large trade worth 1147 crores, effectively a 3% discount to the closing price yesterday. So if you see a bit of a corrective move today, you know why, but very likely that this might get executed in the block window itself. So may not have too much of a leakage, you might not have too much of an impact also on the stock if it gets consumed easily. So watch out for Eureka Forbes in the session today. Could be an interesting one. It's large, but the overall size is not as large as maybe some of the others that have happened, including a Whirlpool that has recently happened. So keep that in mind. Large from a Eureka Forbes perspective, but 1,200 crores is okay. I'm highlighting Walchand Nagar. There could be more companies as well, but Walchand Nagar came to my mind, so I'm highlighting that because the cabinet has approved amendment in the FDI policy on the space sector, has allowed 100% FDI under government route and up to 49, 74 and 100% in the automatic route for different sub-segments. So a lot of the companies which kind of cater to these defense space related pockets, some startups as well, by the way, there is Skyroot and some others, could all be in focus. But from a listed market perspective, somehow I could think of Walchand Nagar as the easiest one that came to my mind. So I'm highlighting that. Please be mindful that there could be more. But very likely that the stocks in this space, including this one, could react positively. So watch out for that. And there is a brokerage note that amongst others, I mean, ABB has some positive notes, etc. But the Citi note on Maruti was interesting. They maintained a target price of 14,200 on the company. They've opened a 90-day positive catalyst watch, believing that monthly volumes and Q4 results both will be strong. So watch out for Maruti. If it has a positive reaction, you would know why. It's a catalyst watch opened by Citi. So that's to be kept in mind. And just before we toss to the editor's cut, Tamanna, the news flow on Z Entertainment doesn't cease to flow, right? I mean, now show cause notice possibility.
Yeah.
It's just caught in a quagmire from where it somehow doesn't seem to be able to get out.
You know, if Sony was being questioned about why it walked out of the deal, whoever made that decision to pull the plug right now would be saying, thank God we did, in a sense, because of all of the negative news flow on Z. So the company always maintains that the investigation is on, we are cooperating, everything is, you know, in the ether. But the fact is that the news continues to be very, very negative. I would also want to see today what's happening to Paytm. Can you continue to stick on a 5% upper socket through the week with no movement at all? Just wanted to mention this Bernstein note on PSUs, only because the rally has been phenomenal. Their India quant strategy is focusing on how far the PSU rally can go, and arguably that's the question of 2024. The index, the BSE PSU index is already up 21%, YTD 279% since October 2020. They say it's an expensive trade, especially industrial PSUs, though relative valuation advantage is still there. Fundamentally, the pack looks better versus history. However, consensus looks too bullish. One point I thought is important is that the rally is driven by retail investors, no meaningful institutional crowding in PSU names in this cycle. It's a momentum play, high volume, dividend yield and value. Now, this is one space you need to watch before you go into election season. Typically, it does see a boost there. So there are a whole clutch of analysts who are bullish on PSUs, but tread with care is all I would say.
Yeah, no, very, very much so. And just viewers, remember, we're distinguishing between PSU banks, which are still cheap, relative to other PSUs. So that's the key point to keep in mind. Just two more things. Sula Vineyards could be a stock in focus, so that's to be kept in mind. There is a positive news flow. There is also, how do I say, a bit of a negative to the Sula's announcement in that the future VAT refunds are capped at 20 crores. So even if the number may be higher, they don't get it, I think there's a clarity that we'll probably try and get from the management sometime during the course of the day. So that's to be watched out for. I was just trying to see if there are some other news flows. There is a story in one of the dailies, Tamanna, about how ITC might want to buy a small stake or a large stake in Pratap Snacks. So very likely that Pratap Snacks could react today. So if it does, you know why it is reacting. Thought should bring that out for you. And if yesterday's downgrade by Avendus Spark on OMCs wasn't enough, we have a CLSA downgrade. CLSA is saying that we are cautious and they are downgrading the stocks to a sell. So watch out for BP, HP, IOC. They were the top, amongst the top losers in the PSU pack yesterday. Very likely they could be reacting today. Maybe I should have mentioned that first when Tamanna was highlighting the PSUs, but just thought that it was important to bring out this brokerage note as well. So, you know, that's the sum and substance of what the stocks you should monitor. Keep in mind, PCR is low, so that's a positive, but the number of stocks in the F&O ban is 15. It usually doesn't happen unless the market is a concern. So keep all of that in mind.